Happy birthday, Chrono Trigger! Yep, 26 years old today. The original on the Nintendo. And then there was the re-release that came out on the DS. But yet, 26 years. Not super memorable, but I guess in Square Enix's mind or whatever, they're just gonna announce it every year that it's the anniversary of Chrono Trigger instead of like ever come out with a new Chrono Trigger game or anything like that. Why would they do something like that? Whatever. So today is March 11th, 2021. So first story I wanted to talk about was directly from the NASDAQ's website. U.S. stocks. Wall Street jumps after upbeat jobless claims data. So the Department of Labor comes out with these reports periodically, and the report for the jobless claims was less than was actually expected. So that's a good sign as far as forecast projections for what the market's going to do later. Or no, sorry, that's more really the economy as far as people going out and buying things. So yeah, things looking good there. And specifically what they said is that the blue chip Dow index hit an all-time high for the fourth straight session on Thursday. And it's also due to easing worries about rising inflation. So I'll talk a bit more about the rising inflation. So all of this is fueling what I mentioned yesterday, this move from big tech growth stocks into more value stocks and more cyclical based stocks. All of this also because of the economy opening back up, the pandemic hopefully being over. Next story I want to talk about is from CNBC, once again mentioning Apple. So Apple just lost a Disney's worth in market cap, but true traders are split on whether the stock is a buy. So yesterday there was a story I mentioned about why a trader thought it was a buy, and the guy that's saying it's a buy is basically saying the same thing, but he even went less technical into it. Where the guy yesterday was saying if it's three consecutive dips where it's minus 3% loss, go for it. But this guy's just saying, yeah, they've been hit, kind of hard. He still feels there's a lot of growth potential in there. Recently, they did announce something like a 20% drop in production of the new iPhone. But he says even that still means 12% growth for the new iPhone. So that still looks really good. And he feels that, it hasn't been priced in the proliferation of 5G. And what he mentioned is wearables, which I guess would be earbuds, that type of thing. So he's still, a little bit more bullish on Apple. Whereas the other analyst in this article kind of mentioned some of the things that I mentioned yesterday as well, as far as Apple trading, their stock price trading kind of high compared to their future cash flows value. So things to watch out for there. But the article also kind of went more into that that type of ratio. It hasn't really been used for growth tech stocks traditionally. So it still feel like there's some room for growth there. And yeah, Apple's not going to go anywhere. So I can kind of see what they're getting at. If it went down some, it's probably going to go up eventually. So here we got Luca, our best friend. Oop, messed up her name. Not going to waste too much time on that. May just have to call her Uka. Or CCA. And the next story I wanted to talk about is from MarketWatch. So electric vehicles, real hot right now. Lot of news about them just about every day. And what MarketWatch wanted to talk about was Tesla. NIO stocks rally after Mizuho analyst said buy the EV leaders. So in this article, an analyst, Vijay Rakesh, he feels that the price target for Tesla is 16% above current levels, And he also suggests that NIO's target is just maybe even at a 45% rise. So with less than 1% share of the global electric vehicle market, he feels that Tesla still has significant room for growth, and that EVs are expected to grow 25% globally by 2025. So he feels that their current share of the market they still have a lot of room in the market to grow, as the market grows as well. So he feels that the target price range for Tesla is $775 and $60 for NIO. NIO's still pretty volatile. It's a newer company. It had highs just above the target of $60 just even earlier this year. Tesla did close at just under $700 today, so it's kind of gained back most of what it lost over the last few days, pretty much. NIO's a much smaller company than Tesla. NIO has about 1/10 the market cap of Tesla, under $65 billion. So they did close at $46.03. So, according to this analyst, still a bit of room for growth. And if NIO does even become half as big as Tesla, a quarter as big, that would be insane. So, both are beating the S&P market, the S&P 500 for the year to date. One thing that they mentioned about NIO that I thought was real interesting, and also to kind of piggyback on an article from yesterday, is that they really are trying to hit that sweet spot of, a more affordable electric vehicle. And kind of the way they're doing it that's real interesting is, I believe they are practicing what's called a battery as a service business model. And basically what that sounded like to me was your electric vehicle, you run out of charge, instead of just going to a charge station and waiting however many hours to get it recharged, you actually would go into a service station and trade your battery. So you're basically leasing the battery on a monthly rate. I think it'd be more, now that I'm thinking about it now, I can imagine it being kind of like sparklets or the water coolers. You don't really own some of the equipment, and it is dependent on you paying that monthly fee so that you get the water. And in this instance, it would be so that you could get the batteries, so that you could exchange them. So yeah, interesting one to watch there. Next story is from Bloomberg. The economy looks set to roar, and that worries investors. I think this was probably the best article I read today. There's been a lot of other articles, over the last several days talking about the rise in bond yields and how that affects everything. And this article probably explained it the best. So, rising bond yields / lowering bond prices for many professionals, they equated that to like Godzilla poking his head over water, poking his head off the coastline. Saying, kind of like time to run in high, trouble may be coming. And really the reason that is kind of the feeling is because bonds have been in a bull market for 40 years. And for, a millennial, that's going to be kind of your entire life. So, and that really goes down to low interest rates. And yeah, basically our entire life we've had these low interest rates. Because they've really trained us to be consumers and to buy stuff off of credit. So you gotta have low interest rates if you're gonna buy anything and everything off of credit. And that's really how it's been. Yeah, like I said, basically all our lives. So what else did they say? What does this actually have to do with the bond prices though? Well, what they go into is that the yield on the benchmark 10-year Treasury bill climbed this month to a high of 1.62, up less than the 1% start of the year. It's still very low by historical standards, but it does make investors worry. And how is the Treasury bill rate actually used? Well, in financial analysis, they have what's called the risk-free rate of return. And this is what investors use when they create their models to see what type of return they would expect on some sort of financial instrument. And the risk-free rate of return is compared to some other asset like I mentioned, and the spread between the risk-free rate of return and the expected rate of return of that asset, that's really the margin they're looking for. And if the treasury yields are going up, that means that the spread between the risk-free rate of return and whatever asset is smaller. So that basically means that these tech growth stocks, they don't look as attractive. They look as attractive as just investing in any other value stock. Something old. Those I just started calling them the boomer stocks, the one-letter stocks. Your T, AT&T, your F, Ford, G as GGE possibly, B, IBM. Like I said, old stocks, the value stocks, the stocks that have been around for 50 years plus. And, I'll go into some other articles why I kind of really agree with them. But yeah, it's definitely something to consider. They're the value-based stocks. And that is why they're affected, and really why the market overall is affected by all these changes in the Treasury bill yield. So, and yeah, kind of they go more into it. They specifically mention that tech growth typically requires a lot of money, borrowed money, for the company to grow, for the company to innovate. And this seems to be that the interest rates are going to rise too. So if the interest rates rise, it's going to make it harder for these companies to borrow that money. So the hotter economy could mean inflation and rising interest rates, like I mentioned, which could hurt bondholders, so investors drive up yields to give themselves a buffer. Next story I wanted to talk about, hardly playing this game. I knew it'd kind of be very difficult to play an RPG and read at the same time, because it's like reading while reading, which I'm not going to try and do. See, Bloomberg, BlackRock says gold, falling as equity hedge, faces risk. So BlackRock, they're a consulting firm. They're saying that bullion is proving to be a less effective hedge against moves in other assets. So, kind of mentioned that there's pricing models, and they're really, you build your hedging using what's supposed to be a less risky asset. But they're going into detail that saying, maybe gold isn't it like people thought it was. But realistically, they're saying, yes, it is, but you got to think about your investment horizon. And for gold, it's like centuries, is what they said. So I thought that was pretty funny how they mentioned that. And just because of the recovery, it's going to be affected as well. And while it is a reasonable store of value over a long term, yeah, like I said, centuries. You got to think centuries. And gold isn't working well as a hedge against either stock moves or inflation risks. Spot gold traded at $1,735.16 an ounce this morning in London. That's down more than 8% this year. So quite a big drop. While the gauge of the U.S. currency has risen about 1.8%. Among equity benchmarks, the S&P 500 index has gained almost 4% in 2021. So, in short, when the market's hot, gold is, people are moving away from gold, which makes sense. They're going to want to move more towards something that's, more, going to have more growth potential, or even if it is a value-based stock. So the next story I wanted to talk about is from the street. Grayscale arbitrage trade unravels as trust lags Bitcoin. So Grayscale, they're a company. They have a fund out that you can invest in case you don't really want to invest in crypto directly. And really, the way they're supposed to work, they're supposed to be priced basically at the same amount as Bitcoin. And the way a lot of the investors in GBTC make their money is because they actually borrow the Bitcoin. So I'll actually read this because I need to explain it better. But they basically do arbitrage between the price of Bitcoin and the price of this fund. So the arbitrage kind of works like this. Like I said, they borrow the Bitcoin, and the shares that they have of GBTC, they carry a 6 month lockup, and then when the lockup expires, they sell the shares of GBTC on a secondary market to retail investors like you and me, and that's usually at a premium. So they use the proceeds, like when they sell it to people like you and me, to actually then go buy that Bitcoin. And the spread between what they sold it to people like you and me for and what then they had to go buy the Bitcoin for, that's they pocket that difference. And right now, it's the difference is kind of like negative, so they're not really making the money for that. And GBTC, they're hoping to raise the price of their stock, which they obviously then sell it more to us by doing a 250 million share buyback. And just gotta mention, they mentioned here ARK Investments, Kathy Wood, she's a major GBTC holder. So the next story I wanted to talk about is from Bloomberg. Baidu seeks up to 3.6 billion in Hong Kong second listing. This one is this was a little bit different, not really like related to bonds or crypto or I guess it's kind of tech, but yeah, I thought this one was interesting. So for those of you who don't know, Baidu, if I'm even pronouncing it correctly, they're a Hong Kong search engine, and they are publicly traded on the New York Stock Exchange. But what they're doing with this, they're going to have a second listing. So they're having a second listing on the Hong Kong Stock Exchange. So I thought that one was real interesting. And they're hoping to get a maximum price of 295 Hong Kong dollars for the portion of the sale. And what's interesting is this is actually at a 19% premium of what the stock closed for yesterday on the New York Stock Exchange. So potentially some arbitrage opportunities there. So Baidu, they follow on-car sales websites Autohome Inc. in seeking a trading foothold in the Asia financial hub this year. So yeah, this Autohome Inc. They basically did the same thing. They're traded on the New York Stock Exchange. Oh, actually making progress in this game. So make sure to talk to her first. Always talk to a lady first before you go and pick up her things that fell off of her. That's some advice you can't take. Don't necessarily take my financial advice because I'm a nobody, but do take that advice I just gave you there. So right, where was I? GBTC? No, Baidu. Right. So real interesting that they could be trading at a premium on this Hong Kong exchange once it does this second listing. So next story I wanted to talk about is from Real Money. Shark Bites. I've got my money on this undervalued iGaming stock. So yeah, I thought this one was pretty interesting too. Saw that Kramer had commented on some iGaming, and by iGaming they actually mean like gambling, not like gaming like I'm doing now. So that was a real interesting one. And so what are they saying? GNOG is the stock ticker that they're making they're making some interesting moves right now. As far as internally, because they had a bunch of warrants that were set to expire, and they announced this back in February, and the warrants were set to expire March 8th. And basically what that meant is a bunch of people, that held options, they were forced to now, exercise those options, and that meant that there was this sell-off. So that kind of put more of their shares of their stock out in the market. So we kind of did see that dip because of that. But yeah, I think this seems like a really good one here. It's comparable to DraftKings. DraftKings is obviously more for sports betting. They're trading right now at 20 times book value. They're this Genome or whatever, they're kind of high too, like 6 times book value. But like I said, compared to DraftKings, that's a lot less. And the one that Kramer compared them more to it. No, he didn't really bring up GNOG. What he brought is another contemporary of theirs is Penn, Penn, and they're also more like DraftKings, so I think more into the sports betting. And I guess the part that I didn't really agree with Kramer is he made this tweet about, goodbyes, because when it comes to voting on gambling, a state's going to see the revenue potential and that it's for their best interest. And I don't know if he wrote that they're always going to vote for it, but would you mind if I walked around with you for a little while? And here's another tip. If a lady offers and asks you, if she minds to walk around with you for a little while, you say, sure. If your option is that or sorry, of course. So yeah, back to Kramer. Yeah, not really sure about that being true. Gambling has been on many ballots in many states across the decades, and it has not passed many times. Even a very mature market like Mississippi, I believe it's the third most mature market in the United States, even they have limitations on what they allow in regard to online gambling. So not really sure that Kramer's statement was correct. But still, this company does look like it could be a great one. They currently started operations in Michigan, and if some of these other states like Mississippi, Louisiana, where there are currently a lot of casinos already, there is already like a physical gambling market, brick and mortar. They already have deals or the rights, something like that, to start in those markets. So, and this seems like an easier one to get into. They closed at 1682. And, if I start referring to something as the pandemic low, that's typically going to be, around when there was a big crash right this time last year, really. Oh, that's kind of like the other anniversary we're having, right? Like 1 year since the WHO announced a worldwide pandemic. Right. So hopefully that'll be over soon. One thing that I kind of did want to mention about this one, another hot topic that's been in the financial news a lot is this whole idea of SPACs. Special Purpose Acquisition Companies. And they did actually start as a SPAC. But then they bought a company by the name of, it's Golden Nugget Online Gaming, yeah. So they actually bought this company, and yeah, the reason they bring up SPACs a lot is because, at their initial onset, they're really not anything. They're just like, hey, we got money, we plan on doing something with it someday. That's like literally what they are, I think, man. But a lot of them, what they're really doing is they're kind of trying to circumnavigate the system by they themselves being this publicly traded company that has to get audited and all that, and like go through the whole strict process to be publicly listed. So what they're doing is they're going to merge with a company that does whatever the heck they want it to do. That's kind of like how a lot of these cannabis stocks work, really. They're really like these SPACs, and they merged, or they got these cannabis companies. And right, so that's kind of how this Golden Nugget Online Gaming started. They started as a SPAC, and they basically got merged with. And I mentioned the whole warrants thing, and what I thought was good about the warrants, besides like explaining kind of why the price had been going down, is that with this being a SPAC, it does have like a high concentration of ownership with a single person. It is 52% owned by Tillman Fertitta, who owns a bunch of restaurants, hotels, and more famously the Houston Rockets. So whenever there is, and I didn't badmouth ESG yesterday, but I just said I didn't really believe in it as much, but there is something to it, and a high level of ownership like this, you definitely got to worry about him just dumping it at some point, or just quickly, and having that high level of a concentration like that of stock ownership, that's a lot you can potentially dump. That can potentially be dumped. So next story I wanted to talk about is from the Wall Street Journal. Just a little fun story here. Almost done here with the day's news. Is Beeple NFT fetches record-breaking $69 million in a Christie sale. So non-fungible tokens. So basically, this artist that goes by the name of Beeple self-trained artist apparently. With this $69 million auction, he is the third most lucrative or living artist, next after Jeff Koons and David Hockney. So, if you were like a big into art and you wanted to buy the most expensive art available, this guy's got the third most expensive art available. And what's even crazier is that this $69 million is more than has ever been paid for an art by Frida Kahlo, Salvador Dali, or Paul Gauguin, if I pronounce that correctly. So, crazy time for this whole NFT thing. But also to put it into perspective, this Beeple, he wasn't a nobody. So don't think that like you can just, draw something on Mario Paint and spend $100 worth of ether to create an NFT, and then you're gonna like make $1 million off of it when you put it in an auction. No, this Beeple guy is already, pretty internet famous. He has an Instagram, has had this Instagram for several years or something, and already had a bunch of followers. So he already had a bunch of people that really liked the digital art, I guess you could say, that he was creating, and there was somebody that loved it enough. So next tip, this isn't a tip about the ladies, but maybe it is. Don't steal food. It'll make you look like a pig. So we're not gonna eat this. Kind of don't remember what much to do after that one though. So, but yeah, next tip. That's the next tip. Don't make yourself look like a pig in front of the lady. You might end up in front of a court and maybe end up in jail for a few days because of that. So yeah, crazy people. Crazy time for art assets, definitely. So the last story I wanted to talk about is from Crypto News. With the $1,400 stimulus being passed, and Biden, he either signed it today, this evening, or he's going to sign it tomorrow, put it into law. He did have an address this evening. But yeah, Bitcoin did rally back up to 58,000. A little bit of resistance at that level, it seems. It'll be interesting to see how it goes some more and into the weekend. But yeah, the story that I actually wanted to talk about is from Bloomberg. Largest crypto exchange names ex-U.S. Senator Baucus as advisor. So I really saw this as a pretty big deal. This is Binance Holdings that hired this guy. I mean, he's just an advisor. That could mean several different things as far as being an official or unofficial position, but obviously they're paying this guy, and this guy has some interest in Bitcoin and in the Binance exchange doing well. But who is that? Who is this guy actually? So he was a former senator of Montana for, 3 decades. So this guy was in the system. And during his tenure, for part of it, he was chairman of the Senate Finance Committee. And he's also been ambassador to China. So specifically how he plans on helping Binance advise him on policies covering some of the world's most important financial jurisdictions and agencies. So a little bit smaller news, but similarly, blockchain.com. They also announced that they've invited Obama deputy, or that he's going to be on there. Obama deputy of staff Jim Messina has joined their board. So a lot of news today. It's bonds. That's the one you really got to follow, because bonds. At least that's what the market news seems to say, that the bond prices are in these high yields. That's really what we got to watch out for. Got to weigh different things out with the bond yields. If the bond yields means that interest rates are going to go up, does that mean that that the real estate market is going to get harder to get into? If the real estate market is going to get harder to get into, does that mean that there's going to be less competition, less bidding against that? Or, what about the stimulus? Are people that are couples making less than $150,000, are they going to use their stimulus to possibly enter the housing market? Just overall, from what these articles are saying, I kind of feel that they're saying right now would probably be a better time to do it. We did have all-time low interest rates during the pandemic, and these rising bond yields do seem to suggest that we're going back to pre-pandemic interest rates. And also, these pre-pandemic interest rates are just making these value stocks seem more attractive. So definitely look into those. That's what I'll be looking into tomorrow morning. And also, I think the one I really liked was this Golden Nugget online gaming. Regardless of the fact that there's several markets that do not have online gaming, and by online gaming they mean like blackjack, that type of stuff. There's several states that don't allow it. The fact that they're not competing with DraftKings, that they're not competing with Penn, that seemed that blue ocean. So yeah, that seemed like a good one. So yeah, that was the market news for today, March 11th. Thanks again. Really like